What's up everyone? I hope everyone is doing well. This video is a highlight from a stream that I did on Sunday. The reason I'm posting this highlight right here is because this is the type of content that I would post on Patreon. And in the middle of it, I was like, gosh, this is quite valuable. And I don't want to keep it just for the 1,000 people that watch the stream. I want to release it to all of you for you guys to see. So if you don't watch the stream, you can watch this clip and take value from it. I'm going to be talking about taking profits and if I'm going to be taking partials on my strategy, on the strategy that I'm currently building, and what the difference would be in percentages if I am to take partials in the middle, if I don't take partials with different strike rates. Now, this is not something that you should take at face value, but more of something where you can understand my thought process and then apply it into your own strategy. As everything that is on the Patreon, I do have a strategy there, but it's important for you to look at it and apply it into yourself. If you guys want to support the channel, make sure to check the links in the description. Not only Patreon, where I also give you a 30-day money-back guarantee. I also have links for my Forex funds and FTMO, which will give you 5% off on my Forex funds and FTMO. Unfortunately, I do not have a discount code, but check the links in the description. Hope you guys enjoy, and then let's go into the clip. Let's go. Okay, so giving the possibility of a 40% strike rate in my strategy, 40% strike rate, and taking profits at 10R. With taking 80% at 10R, and let's say that 50% of the trades that go, meaning from these 40% strike rate, 50% of those trades, so 20% go to 10R, and at 10R I take 8R. In 100 trades, I would get a total of 100R, yeah, because it's so 20 times, because it's 50% of 40%, it's 20%, times 8 minus 60, because you would take 60 losses. So that would end up to a total of 100R right here. So after 100 trades, the average would be 100R. 1,000 trades would be 100R. Then I started playing with other possible opportunities, such as 20% at 5R, 60% at 10R, 25% at 4R. Like, these were different possibilities. And below these possibilities, I also put the probability of these things getting hit. So in the 40% strike rate, in this 40% strike rate, what was the probability of it getting to 5R? And I gave it a 32% possibility, and to 10R a 50% possibility. I basically gave different probabilities of each thing's happening. And don't forget that this is all on the 40% strike rate that I'm laying above there, on the 40% strike rate. So in 100 trades, 12, almost 13 trades would hit 5R, where I would take 5% and then pull back to break even, and 20% of trades would go onto banking 10R, and the rest would be a loss or a break even. And if that happens, if we go to 10R, I make 7R in total, because I took some partials at 1 to 5. And after 100 trades, you get 72.8R. So it's a difference of 27.2. And by the way, this is all at our arbitrary possibilities, right? This is not based on data, which is one small problem, obviously. I just assumed these type of things because, well, you're trading with like 2 pips stop loss, and if it goes, is it not going to go 10 pips? So whatever. So yeah, keep in mind that this is arbitrary numbers. If I take 25% at 4R and 55% at 10R, I'm going to be getting, if I hit the 10R, 6.5R, which at the end of 100 trades is going to be 66R, which is a difference of 34R. Then, if I take 20% at 4R, 60% at 10R, then after 100 trades, it's 72.8, which is a difference of 27.2. And then taking 20% at 3R, so paying myself first directly, I gave I gave the probability of this 50% and 50% of going to 10R. Because it's like, if a trade goes, it almost, like, if it breaks structure, it's probably already at 3R. So I'm going to take a little bit of profit. So, but either way, it is going to give me 6.6R if it reaches 10R, and 72R if it reaches the 10R after 100 trades. After 100 trades on average. So it's also a difference of 28R. Now, this doesn't look like a big difference, like 28R. But if you really look into it, this is 272R after 1,000 trades. So this can be a difference of like 100K, $100,000. So that was my way of looking at it. And if I feel comfortable with these probabilities playing out and allowing myself to take break-evens once, instead of taking some partials in the middle. So for example, in that trade that was running, it ran to 8R and it pulled back to break-even. If I allow myself through those ups and downs, then I can get away with more percentage at the end of 100, 1,000 trades. So yeah, for now, I'm sticking to the 10R. And by the way, I just gave you some premium content, man. Like in the middle, I was like, this is something that I should have shared on Patreon, but there you go. Strike rate increases if the risk reward decreases. Yes, yeah, because I did not take into account. I took into account a 40% strike rate. The returns are right. Just the strike rate, as you're saying, does not stay 40%. But basically this changes that I made. So if I do this, these changes that I made change the strike rate. But this doesn't really matter because I'm using a different strike rate. So I'm just using this as a reference of winners and losers. So to understand how many losers there are. So that's the only thing. So these percentages continue to be right, even though the strike rate increases because you're getting wins much more often instead of break evens. But yeah, if you guys like this type of content, which is a little bit more in depth, check out the Patreon, because that's what we do there. Strike rate should go down as you aim for a higher risk reward. Yeah. Basically, it depends on if you count break evens as a loss in terms of your strike rate. Because let's say that in 100 trades with a 40% strike rate, 100 trades with, and I can share this again. Okay. If I am considering a 40% strike rate, it means that 40 trades in 100 are going. But here, only 20, because it's this times this, are going to hit full take profit. The others are going to be break evens. So 20 break evens, 20 8R. So if you don't count break evens as data for your strike rate, then you're basically doing 20 out of 80, which is going to be 25% strike rate. Well, and some people are not going to like it, man, if the percentage is there. So let's... Oh, and by the way, I wanted to say this on the stream too, which is like, if you guys join the Patreon and you send me a message saying, dude, I don't like the content, I'll give you a refund. I don't care, because I'm confident of what is in there. But let's go to Equity Curve Simulator. Let's have a simulation of what we just talked about. So starting equity, $1,000. Win probability, so let's say 25. Number of lines, let's do 50, whatever. And risk per trade, should we put 0.5? 0.5 and start simulation, whatever. Biggest max drawdown, 19%. Goddamn, that's a lot. I'll change the number of trades. Biggest max drawdown is 17%. It's always profitable, which is good. It's always profitable, but max consecutive losers is like 19, which is a lot. But if we go back to 0.5, you have a max drawdown of 8.2. Like, the average max drawdown is not huge, because the average percentage over 100 trades is fucking 137%. Like, that's a lot. 100 trades. Yeah, man, that's the thing. Like, do you mind having an average max drawdown of 5.7% when your average performance per 100 trades, so let's say you're taking 20 trades per month, so one per day, that you are getting every 5 months, you are making 137%. So, okay, this was it. I hope you guys enjoyed. Make sure to check the links in the description if you want to support the channel, and I will see you this Saturday. Peace.